Welcome to the Boomers Trading Challenge, where my two favorite boomers, Bart and Eelco, are competing for 2 tickets to a game of FC Barcelona with one of their kids, both starting with a $250 starting balance, trading on BitGet, executing their trades with Teal Street, our two favorite sponsors. You can find the links in the description down below. Eelco's account is currently sitting at $251.36 and Bart's account is currently sitting at $251.33. Last week, Bart was trading Ethereum, Eelco was on a family getaway. This week, Bart is on a family getaway and Eelco will be trading Ethereum. I want to wish you guys the best of luck. Eelco, I want to wish you the best of luck and I can't see at the end of this week once more how your trade turned out.
Let's go, Yep. I'm very excited. So bring on the shitcoin Ethereum.
Eelco, I'm going to enjoy my beers in Berlin and I wish you a great stop-loss hit.
Have fun in Berlin.
Another Sunday, which means another weekly recap. The last week Bart was visiting Berlin, but Eelco had the chance to take a lead over Bart. One asset to trade, which was Ethereum, only one trade to take on Ethereum. Eelco, I can't wait to see how it went. So, without further ado, I'm gonna give Eelco the spotlight.
It's my time to shine, right?
It is, Eelco.
I have a lot of words I can say about Ethereum, but it was kind of difficult to trade for me. Especially I was late to the party with the first pump beginning of the week, but let me show you on TradingView what I did.
I can't wait to see it.
So as you can see, I put in a high time frame. I put in some liquidity zones. That Ethereum would pump this week to 2800 USDT, but it didn't. And like I said, for the first pump, I was kind of late to the game. As you can see, this was the first one. And if I zoom in to the 50-minute. So as you can see, I took an entry at 1817, thinking potential pump will go up. And I put in some liquidity pools, which he must hold. And I put a downline with must hold added in text. But this was my trade for this week. Funny enough, it's still running. It didn't stop.
Okay.
Stop loss didn't hit, but as you can see, the take profit also didn't.
Yeah, exactly. Instead of taking an intraday trade, you decided to take more of a swing trade in this case. Am I right?
Right.
And that's completely fine. The thing that I'm wondering when I look at this setup is why did you decide to put your stop loss at the level that you placed it at instead of slightly lower? Because I can see the level must hold, which to me is also an interesting level, and I will explain later on my chart why. But why did you decide to use a tighter stop loss instead of putting it at the actual invalidation on the chart?
Do I have to be completely honest, Yip?
I want to be completely honest all the time.
It was kind of an emotional stop loss.
Okay, explain.
First, I thought I must take the stop loss at the must hold line.
Exactly.
But then I looked at the risk reward ratio in a way to a side that I didn't feel comfortable with.
Okay.
So that's the honest answer.
What is the position size that you took? And what is the risk on the line?
Position size. Don't know.
What was the risk that you were risking, that you were taking on the trade?
So what I was risking was about $8.
Okay. And I see 2 slight issues over here. The first issue that I see is that I feel like you were taking a market entry. And the second issue that I'm seeing is that you were taking too tight of a stop loss. And when I talk about too tight of a stop loss, I'm never talking in like absolute percentages. When I talk about taking too tight or too wide of a stop loss, all that I'm talking about is that, in my opinion, you should base your stop loss always on the invalidation that the chart is providing us with. In this case, it was the must hold level that I think is an important level indeed to hold. So I don't understand why you weren't using that low to cover your stop loss, but instead went for the tighter stop loss. Right now, it was front running your stop loss by a few cents, but it was more luck than actual skill that is so far saving this position. And I do think, I'm also quite bullish on Ethereum, as you guys know, because I just got filled on a swing long as well earlier this week. So I do think that this position can still run higher. But I was just wondering why you decided to enter where you eventually entered and why you decided to take a tighter stop loss. And you obviously explained already about the stop loss. It's because your RR was increasing because of the tighter stop loss. Am I correct?
Sure, yeah.
So basically it has a little bit to do with being a little bit greedy.
Yeah, you can mention that. Yeah.
Yeah, and that's fine. It's fine. I just want to figure out why you decided to choose that stop loss. And I feel like this is an issue that is quite common for you and Bart, both of you. I can also see it with your entry, because if I'm correct, I think you market entered right over there.
It was a market entry, yeah.
It was a market entry.
Yeah.
I can indeed see that. And you market entered probably because price was breaking out above that previous high.
Exactly.
I can see. Without further ado, let me share some charts and I'll try to explain to you guys what I think could have been improved over here. The position is still running, but there's still plenty of stuff to improve. So let's dive into it. So there's a few things that I kind of want to explain to you guys. First of all, I was also bullish on Ethereum, right? I also think that we are looking at a potential bottoming structure over here. So I'm also currently swing long. But about the invalidation, I think there's two ways to cover your stop loss here. For my swing, I'm using this low over here. But obviously I have different triggers, I have different targets and different executions. You decided that this little level over here is a must-hold level. And I do think there is definitely something to say for that, because you have this little order block over here, and if we extend that order block that we can see over here to the left, we can also see it's a pretty obvious previous range high area. Correct? We have this resistance over here, resistance, and then over here we had support. So we can say, okay, this area is the range high, and this area over here is the range low area for Ethereum. So I can definitely see a case where if price is truly bullish, you kind of want to see that range high area that we have been forming over here in confluence with this little order block or demand area that was fueling this impulse over here. You want to see that area hold indeed. So this is a must hold level. But if this is your must hold level, then this is also the low that you should be using to cover your stop loss at all times, Eelco. So let's say, in this case, you entered over here, and I will explain some more about the entry later. And this is the must hold level. At all times, what we do first is determine the invalidation. Before we start looking at targets, we always need to make sure the price is providing us with an invalidation. In this case, you thought, okay, this is the invalidation for my bullish thesis, and you were entering over here. Now, if that is your entry and this is your invalidation, there is no case where you are going to move your invalidation from this low to a tighter low over here. I don't care. Always put your invalidation at the invalidation that price on the chart is providing us with. Never let RR influence the decision making. Never let greediness influence the decision making. And if you have an entry trigger and an invalidation over here, only then we start looking at take profit targets, which is the next part that I want to discuss with you guys, because you marked out some interesting liquidity levels on the chart. I think you marked out this high over here, and you also marked out these equal highs over here, and especially these equal highs over here, but also this high over here. I want to discuss something, because when we look at taking profit on a position, it is always very important to once again think like smart money and also think like retail. What do you think that retail is looking at when they see these equal highs? What do you guys think?
Obvious target.
Exactly, Bart. I love that. An obvious target. What do we think that retail thinks when they are looking at this high over here? Similar thing. It's an obvious target because this is the highest point that we form after that low before we form a lower low over here. What I want to suggest is that whenever you guys feel like that a certain high or a low is an obvious take profit target, always decide to use the second to highest high or the second to lowest low. In this case, that you are choosing this high over here, which I'm marking out with yellow right now. And over here, it is quite hard to determine the second to highest high. So what I in that case do is I go on a lower time frame, 1 hourly in this case. I move back towards these highs, and I can see that over here, we have a second to highest high resting. So instead of choosing the white lines that you now chose as your take profit target, I'm choosing the yellow lines because I always want to be one step ahead of the retail traders. In this case, towards the first target, that's a decent RR of 1.75, and towards the second target, that's a beautiful RR of 6.27. Now let's say I close half at 1.75, it offers around 0.8 R. and I close half over here at 6, it offers a total of around, let's say 3.8 R on the position if both take profit targets get hit. And in this case, you are preventing yourself from front running your take profit target, because there's so many instances, and I really can tell you guys this from experience, where we front run these obvious highs and these obvious equal highs that retail identifies as liquidity, even though that the true liquidity is actually resting slightly lower. And it works the exact same with taking profit on your short positions. So we have now determined how to determine your stop loss level, how to determine your take profit target. But what is also very important in this case is that, as we discussed, you market entered in a position over here, and you only market entered into the position right over here because price was breaking out above this high over here. I could just literally see it on the chart as soon as you share your chart with me. What we always want to do with our entry, let's say you decided that price gave you a trigger to start looking for swing longs, and that your invalidation for your bullish bias was over here, and you have determined your take profit targets. All that is left is then to execute your position, aka to make sure that you get an entry. Remember this rule: we always want to enter where other people are getting stopped out. In this case, when we analyze the chart with a replay over here, and we can see the price is breaking out above this high over here. What do we call this over here, Bart or Eelco? Do you guys know?
A swing fill.
A swing fill, a fake break of structure, whatever we want to call it. And this swing failure, this fake break of structure, is inducing people like Eelco in this case, which is totally common and a very normal behavior, to open up a breakout long position. Now, you luckily decided to go for a wider stop loss, but most retail traders in this case will go for a tighter stop loss beneath the low over here, the low over here, or the low over here, but most will take this low over here. This is a very common breakout position that a lot of people take. Basically engineering liquidity beneath the low over here, which means that if this low is going to get taken out, a lot of people will get wrecked. And that is exactly what we want, because that is where we want to execute and enter our position. So if you decided, and that is totally up to you, that this was your invalidation level over here, this yellow line was your first take profit target, and then you start looking, okay, where are other people getting stopped out? In this case, beneath this low over here. Then it's so easy to never get caught as well anymore in market entries, because we always want to work with limit orders. In this case, a limit order right over here with our invalidation over here, and then targeting this liquidity pool over here. You can also see that the RR originally was 1.75. Now the RR is already 3.3, almost double the amount, just because you decide not to work with breakout entries anymore and market entries, but start working with limit entries where other people get wrecked. Alright?
Makes sense, yeah.
It kind of makes sense, eh? So, right now your position, instead of being in drawdown, would have also been a slight profit, which is obviously just a small positive side effect. But after discussing this and trying to explain this to you guys, and I feel like you are slowly trying to, or starting to understand it, I kind of want to implement a new rule into this challenge. And I'm doing this to help you guys, to force you guys to create better decision making. And we started out obviously with only taking one trade on one asset every week. But the next rule that I want to implement into this challenge to enhance your trading performance, I would say, is that I want to force you, I want to obligate you actually, to only work with limit entries and no more with market entries from now on. How do we feel about that?
Sure, makes sense.
Depends a bit, I guess, on the kind of system and the kind of setup you're trading.
It does, yeah. True.
There's a lot to say for your system. Yeah, you use limit orders. Sometimes I think by myself that not so smart, because the limit orders are hit and then price still travels further south or north. It depends on, of course. Oh, I could have had a better entry than you. So I'm sort of slightly laughing at you. But of course, then I'm not that I can do it. The whole series is showing that. But at least in your system, you have an analysis, and based on that you act, and then it's up to the market to prove you're either right or wrong. And it's quite comforting to do it like that. Otherwise, you keep at the moment of having market entering, you're still doubting yourself. Happy to take on that, and let's see how that plays out.
Perfect.
Sure.
Then that's a deal. So with this current trade running, Eelco, what is your current account balance?
With the one running, my account balance is now $249.94.
And what about you, Bart? Obviously, you haven't traded this week, but just to update the viewers, what is your current account balance?
It is still $251.33.
Awesome. So Bart currently is in the lead during the 4th week of this training war between my two favorite boomers, Bart and Eelco, where they compete for 2 tickets to a game of FC Barcelona with one of their kids. Right now, me, Bart and Eelco are going to prepare for our trip to Dubai, and we'll be leaving tomorrow, so no trading next week. But the week after, both Bart and Eelco will continue this challenge with a brand new asset that I will reveal during the next episode, and hopefully they slowly but surely will continue their way towards a $300 trading account balance.